Everyone's heard about Bitcoin and Ethereum. They rise, they fall, they make headlines, but there's another kind of digital money quietly reshaping economies, especially in emerging markets. Unlike volatile cryptos, stablecoins are designed to hold their value. They act like dollars, but live on the blockchain. When people hear the word crypto, they often think of coins like Bitcoin or Ethereum, wildly swinging up and down in value. But what if I told you there's a type of cryptocurrency designed not to swing but to stay steady? That's what stablecoins are. Today we'll explore exactly what stablecoins are, how to recognize them, how you can get them, and why they may be the future of money in developing nations. A stablecoin is a digital currency that's pegged or tied to something stable, usually the US dollar, the euro, or even gold. Unlike Bitcoin, which can go up or down by 10% in a day, stablecoins aim to hold a consistent value. One coin equals $1. This stability makes them more practical for everyday transactions. There are three main types of stablecoins. Let's break them down. First, fiat collateralized, backed by real money in a bank. Examples, USDT and USDC. Second, crypto collateralized, backed by cryptocurrencies locked in smart contracts. Example, DAI, often over-collateralized. Third, algorithmic stablecoins, not backed by real assets but maintained by code and economic rules. But they can be riskier. Terra USD's collapse in 2022 wiped out billions and showed how fragile algorithmic designs can be. Fiat-backed, crypto-backed, and algorithmic, three different ways to try to keep value stable. Think of them as a bridge between traditional money and the crypto world. This stability makes them practical for buying groceries, sending remittances, or saving without extreme swings. Next, how to recognize stablecoins and how they differ from other money. Let's compare fiat, volatile crypto, and stablecoins side by side. Fiat is physical or bank-held. Crypto is digital and volatile. Stablecoins are digital but pegged. That context matters a lot in emerging markets. Coming up next. So how do you tell stablecoins apart from other forms of money? Fiat currencies exist physically or in banks. Cryptocurrencies exist digitally and swing in price. Stablecoins are digital but pegged. Where Bitcoin behaves like a speculative asset, a stablecoin behaves like a digital dollar, much steadier. In countries with high inflation like Argentina, Nigeria, or Turkey, stablecoins can be a shield against currency devaluation. When local money loses value overnight, storing wealth in a digital dollar accessible from your phone can be life-changing. Businesses use stablecoins for faster, cheaper cross-border payments and to avoid expensive wire fees. Remittances. Workers abroad can send stablecoins home faster and cheaper than banks. Savings protection. People hold stablecoins instead of rapidly devaluing local currency. Cross-border payments. Merchants accept stablecoins to avoid lengthy settlement times. But stablecoins aren't perfect. There are real risks and challenges. Regulation uncertainty. Governments worry about losing control of monetary policy and may restrict or ban stablecoins. Trust issues. Some stablecoins, like Tether, have faced criticism about whether reserves truly back each token. Technology risks. Hacks, smart contract failures, or algorithmic collapses can destroy value. Accessibility. Not everyone in emerging markets has reliable internet, smartphones, or knowledge to use crypto safely. So while stablecoins bring opportunity, they also bring regulation, trust, and tech risk that must be managed. Some countries are exploring central bank digital currencies like Nigeria's Naira, similar principles but government-backed. Meanwhile, in many cities you'll find crypto kiosks, P2P markets, and businesses accepting stablecoins. Users must verify platforms, understand reserves, and use secure wallets. The bigger question is, what comes next? Centralized digital currencies or decentralized stablecoins? Up next, the future of stablecoins in emerging markets and how you can acquire them safely. Let's explore what the future might hold and practical steps to buy and use stablecoins. The future looks big. Both private stablecoins and government digital currencies are evolving fast. Some countries already pilot CBDCs like Nigeria's Naira or China's digital yuan, not stablecoins per se but close in function. The real battle will be between government-backed digital money and decentralized private stablecoins offering alternatives where banks fail. Scenario 1. CBDCs become dominant, offering stability but more central control. Scenario 2. Private stablecoins grow where trust and speed beat traditional banking, spurring financial inclusion. Or a hybrid. Governments regulate and coexist with private stablecoins to protect consumers. Now, how do you actually get stablecoins? Method 1. Crypto exchanges. Platforms like Binance, Coinbase, and Kraken let you buy stablecoins using local currency. Be aware of KYC, local deposit limits, and fees when using exchanges. Method 2. Peer-to-peer, P2P, trading. Buy directly from people using platforms that escrow funds. Use escrow, check seller ratings, and confirm payment before release. P2P is popular where banking access is limited, often done via mobile money or cash exchanges locally. Method 3. Wallet apps like Trust Wallet or MetaMask let you receive or buy stablecoins directly. Some freelancers and remote workers choose to be paid in stablecoins to avoid costly bank transfers and inflation. Once acquired, store coins in secure wallets or convert back to cash through exchanges or P2P security first. Use strong passwords, 2FA, hardware wallets for large amounts, and verify platform audits. Also follow your country's laws. Reporting requirements and bans vary widely. Adoption hotspots include Nigeria, Argentina, Venezuela, and parts of Asia. Keep an eye on local trends. Stablecoins aren't just a buzzword, they're reshaping money in places that need stability most. Do you think stablecoins will replace cash in countries struggling with inflation? Drop your thoughts in the comments, hit like if you learned something new, and subscribe to Eye on Your Finance. Thanks for watching. Check the description for resources and links to exchanges and safety guides.